How long will it be before gold breaks out of this trap? Joining me today, Phil Streible, senior market strategist from RJO Futures. He's from the floor of the CME today. Phil, good to see you again.
Yeah, thanks for having me.
So last week when we spoke, Phil, you mentioned that gold was stuck in a trap between the 100 and 200-day moving averages. Prices still haven't broken to the upside, Phil. Is this just the new norm that we have to accept?
Yeah, well, I mean, eventually you're going to see the 100 and 200-day moving average. They're going to converge at some point. They just have to on a long enough timeline. So we'll definitely break out of it at some point. The question is whether we break out to the upside or the downside. And I think a lot of that, has to do with the trade agreement, also geopolitical, issues here with Iran, and then also, how the Fed reacts with their statements.
Well, if we take a step back here and look at the longer-term horizon, one could argue that gold has been really range-bound for the last 5 years. So are economic fundamentals just different now, Phil?
Well, I mean, it is true that it has been stuck in this bigger range if you look at it from a longer term perspective. But I think that what's really driving it right now is whether or not that trade agreement, if it's resolved in a short period of time, or does it drag out for the whole remainder, of President Trump's, his entire out to 2020, so the rest of his presidential term. So I think that if we resolve it at the next, meeting, we could see interest rates start to actually poke back up again. The U.S. economy could get heated up again, and we might have this hawkish tone. But if we have it dragged out over a period of, well over another year, we could see that really weigh in on the economy, and that's where your interest rate cuts come into, when they start talking about that.
I'm just going to ask it to you straight, Phil. What would it take for a return to 2011 highs, and do you see this happening?
Well, you're going to need the dollar index to come back quite a bit. You're going to need to see interest rates. You're going to need that cut in order for it to happen and increase geopolitical risk. Then maybe you get that breakout. But there are so many levels of resistance points. I mean, 1,300, 1,320, 1,350. I mean, there's just too much headwinds there. There's too many short sellers out there. I hate to, bring them up, but there's too many short sellers just trying to sell it and use the money for other, safe haven assets.
All right, let's switch gears here to base metals. We've had analysts come on, this week say that electric vehicles will be the fastest growing demand segment for nickel, cobalt, and lithium. So is this enough to excite you? Do you plan to put your, emphasis and focus on the base metals?
Well, I do like, platinum and palladium quite a bit, and I like that their connection to the electric vehicles. I think copper has been quite a bit of a distressed metal here recently. I mean, there's about 30, 40 pounds of copper in each car. So I think as that picks up, you'll see copper naturally rise. But again, it comes down to that trade agreement, and when that's resolved, those tariffs out there, you got tariffs on solar panels, small electronics, laptops, and I mean, these are all weighing in on the prices right now.
All right, Phil Streible, thank you so much for this longer-term outlook on gold. Thanks for joining us.
Thanks for having me.
And thanks for watching this edition of Kitco News. We'll be back.